you will see price action break out of the trend lines a lot of times in the market. But do you know, if that each time it breaks out, you can enter a trade before the trend reverses completely and make eminent profits? But what do you need to know to take advantage of this market opportunity? After watching this video, you will be among the few traders who enter the market early before the strong market reversals starts taking place. Before the other traders will understand what is happening in the market, you are already swimming in profits. In fact, their stop losses is like your break-even, where you have already secured large chunks of profits and waiting for more strong trending price movements on the chart. Knowing how to identify a real market breakout is where many traders find it confusing, because sometimes the market can act like it's breaking out of the trend line, but after making some little price movement out of the trend lines, it retraces and starts moving in the former direction. At this point, those traders that cannot properly decipher the price movement correctly could have lost their money trading opposite the real market price movement. As frustrating as this could be, there are rules that, if followed properly, you will stand out from other traders and start seeing the market in a brand new perspective. That each time you see the market properly breaking out of a trend line, you will be so happy to trade them, using the strategies and psychology that I will be teaching you in this video. Not only will you be happy to trade them, you will also know exactly what to expect when price breaks out of the trend lines. These information and pro tips has been spread out in every part of this video. Each part of this video is as important as every other part of the video, so follow all the steps carefully so you don't miss out on all the crucial tips. This video is a full course, and as you pay undivided attention to everything you will learn in this video, you will start trading the trend lines breakout with confidence, and you begin to notice how your trading life will change for the better. In this video you will learn 1. Why price breaks out of a trend line. 2. The best type of trend line breakouts you should take, and the ones you should avoid. 3. How to trade the trendline breakout strategy. 4. Live practical examples to help you understand this strategy more. Why price breaks out of a trend line. The market is never moving in one trend. It always switches from a trend to another. After a very long trend, the market gets tired of the trend, then it decides to change sides. As traders, we use the trendline tool to get ahead of the market and predict future price trend movements with it. When the price breaks out of a trend line, it's a sign that the market is about to reverse into another trend, and we must get ahead of it once again. In order to stay above the market with our trend line and become fully aware of what we are expecting from the market, we need to learn how to trade the market from the reversals and also draw out a new trend line for the new trend movement that just begun. A trader that knows how to trade the market breakout will always be the first ahead of the market and will know what to expect next from the market. The best type of trendline breakouts you should take, and the one you should avoid. When price breaks out of a trend line, 3 things happen. 1. The price breaks out of the trend line and starts changing trend direction. This happens like a good reverse, but along the line, it starts developing retracements, moves to the former direction. It returns to its former trend, and even creates more trending movements to the former trend direction. This type is the breakout trap that deceives a lot of traders, but not you watching this video. Watch out for the properties of this breakout pattern. The first thing to notice about this is that the market don't move too fast to retrace to the trend line. After breaking out of the trend line, This is a red flag because the delay makes us understand that the market is not yet ready to move to the target direction. The second property is the quick former trend retracement. After the breakout, this is what confirms that the pattern is only moving out to trap traders. It goes out and gains momentum just to move the trend stronger in the former direction. Don't take the breakout serious if you see this kind of move. After the breakout, then you should not expect to trade it, as it will only result in losses, because you are standing in front of a moving train and your trading account will be crushed. 2. The second type of breakout pattern happens more swiftly. The price breaks out of the trend line. Then it immediately starts finding its way to move back to the trend line. This pattern looks as though it is going down to the trend line to continue the former trend. But to your surprise, you will find out that the price actually take up from there and move strong in a new trend direction. This pattern is easier to spot. It begins moving very fast to the former trend direction, then price picks up from there and moves into a new trend. 3. The final breakout pattern occurs when the market is just too happy to change trend direction. It happens so fast that you don't even get the chance to enter the beginning of the trend reversal. Here you can see the market break out of the trend line and continues moving fast as possible out of the former trend to a brand new trend direction. The market can continue moving in that new trend direction, but the problem is that you will never be able to enter the trade from the beginning of the trend. These 3 breakout patterns happen every day on the chart, and they all trade significantly, but the best to trade among these 3 patterns is the second pattern. Not just because this pattern retraces back to the trend line, but also because it gives more opportunity for traders to enter from the beginning of the trend reversal. I have created a very strong reversal strategy around this pattern, that if any trader follow up to the last step, they will be amazed at the results and the amount of profit they will make from this strategy. This strategy will help you identify the base of each reversal, and everything from the start of the breakout to the entry spot will be planned and well analyzed. This plan works with patience, and that leads us to the next topic. How to trade the trendline breakout strategy. Trading this trendline breakout pattern is a tactical strategy that works with patience and full commitment. The first step to wait for is an evident trendline breakout, so clear that you don't need to stress your brains out to understand what is happening. Now you will look out for price moving back to the trend lines in a somewhat straight manner. But the problem now lies on the spot you are going to look out for before taking a trade. We are going to mark the exact spot where the market will retrace to. Listen, this is very crucial. In order to understand where you must wait for, keep these things in mind. Before the market breaks out of the trend line, it drops a secret key. This key is very precious, because it will give us the best area where the market is definitely returning to. It's a little price movement at the beginning of the breakout movement that happens at the very beginning area of the price movement before breaking out of the trend line. They come in 2 different ways. The first spot is at the beginning of the market movement. This spot must not be at the half point of the movement. It must appear just around the very beginning of the price movement before the breakout. With all this known, we draw out a line on the key spot that we can find on the chart and wait for the market to return to that spot. Take note that for a bigger trend, we expect a bigger retracement movement, and for a smaller trend, we expect smaller retracement movements. Each time you see a very big movement on a small trend, that's a sign that the trade won't work well. And you must also avoid small retracement movements for a big trend. When the market returns to that line, you want to see a very strong price movement signal from that zone. Because you are planning for a strong reversal, you will need a candlestick that will show you that traders are very serious in taking that position to the new target trend. The best candlesticks to look out for is the big bearish or bullish candlestick. The big bullish or bearish candlestick signifies a strong market movement from that particular zone, showing that the market is taking big orders from that position. That being known, let's check out the best areas to place our stop loss and take profit targets. The important areas to place your stop loss and take profit targets after taking the trade to avoid losses. The stop loss should be placed a few pips from the last candles before the big bullish or bearish candle, because after that candle the market is not supposed to move the price beyond the entry candlestick anymore. The take profit target should be placed at the half of the former trending market movement, though sometimes the market goes as far as to the beginning of the last movement. But we can place your take profit target at the half for more assurance and higher probability of hitting profits. Now let's trade some live examples. Here the market has broken out of the trend line. Identify the key level for market return and expect the price to move from there. It has touched the key point. Let's wait for a big bullish candle to appear. As you can see, a big bullish candle has appeared on the key spot. Now let's take our trade and apply some risk management. Our stop loss is placed a few pips below the last low before the big bullish candle, and take profit target is placed at the half of the overall former trend movement. Now let's see if the market will hit our stop loss or hit our take profit target. Another one. Trend line not broken yet. Now there is an evident breakout. We draw our target key point to anticipate the return of the movement. big bearish candle just appeared, and you know what that means. See a quick recap. Now place your stop loss at the high of the last higher candle, before the entry bearish candlestick, and your take profit level at the half of the overall trend movement of the forward trend. Take profit target hit. Now let's see if the price will hit the beginning of the last trend movement. It did. See the amount of profits you just made. If you have been trading this strategy becomes so easy when you practice more. You can backtest or watch this video multiple times in order to sink in some crucial details into your mind. This strategy works on all time frames. If there is anything you don't understand, feel free to drop your questions in the comments section, as I will be answering them all. By following all the rules, strategy and psychology you have received in this video, in a very short time you will begin to notice how profitable you will become as you follow them and practice them more. It will make you millions in the best time to come. In our next video, I will be teaching a complete full course on order blocks, smart money concepts, and how to trade with the big banks. Subscribe to this channel right now so you don't miss out on it and other future strategies. If you need a Forex mentor that will personally guide and mentor you one-on-one, check the description box below for a link into his Telegram channel. See you in our next video.